This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on June 3rd, 2011, at approximately 8:43 in the morning, Mountain Time, 10:43 Eastern Time. Our radio show runs on AM 640 in Toronto, 630 CHED in Edmonton. If you ever miss a show, you can go to Harold's website, hesradio.com. All the shows are archived there. As we start today's show, jobs numbers out in the United States, not good at all. 54,000 jobs were created in the United States. Not a good number. Unemployment rate, 9.1%. McDonald's actually added more workers last month than the United States gained this month. Also, the sovereign debt crisis continued this week. Greece needing another bailout. They're working on it. Also, the United States. Moody's came out and is reviewing their debt rating. And that's no surprise because the debt ceiling, nothing has been decided there, and that's why they're concerned. And it looks like, Harold, the U.S. economy is rolling over, and everyone is talking about quantitative easing 3. Will it happen? I don't think it's going to happen with QE3, but it will happen with a different name. They will come up with something, probably not QE3. But then again, Ben Bernanke said on 60 Minutes they weren't printing money, so you never know what these people believe. All we know, Harold, that things are in a real mess and people should own precious metals.
Oh, you better believe it, Randy. Again, it's a very, very frightening and confusing time for most people. Basically, it was a short week in the United States because Monday was a holiday. It was a long weekend. So basically, the markets are trading actually fairly strong. Gold is above $1,500, actually trading today on Friday at $1,540. We're up $6 on the day. Silver market is trading at $36.19. Did trade as low as $34.92. So we are trading in a range at this point. But again, that's not unusual for the summer and coming out of a long weekend. On top of that, platinum is trading at over $1,800 at $1,819. That's where I believe gold will be by the end of the year, about $1,850. And palladium is trading up $9 today, trading at $784. Actually, there's a very bullish report that came out this week on palladium, and you know we've been bullish on palladium ever since it was $170. The oil market has been volatile, but it's trading right now right at the $100 level. That's causing a major problem in the United States and different parts of the world. The U.S. dollar is down. It's been dropping all week. In fact, the U.S. dollar is down 24 points as we speak and is trading at 74.09. There's no doubt that the U.S. dollar is doomed to go substantially lower. In fact, I anticipate that we will see 71.50 in the U.S. dollar by the end of this year, and that's why we are predicting 18.50 in gold. The euro is rallying again. It's up to 144 today against the U.S. dollar, and the Canadian dollar is trading at 102. So again, we can certainly see by the currency markets that the U.S. dollar is still in trouble, and that's going to continue as we know that the Federal Reserve is not going to raise interest rates for at least another couple of years. They're so concerned about the stock market and the overall recovery of the U.S. economy, but we're nowhere close to seeing that happening. Again, I understand what they're trying to do, but the fact is that they're going about it totally the wrong way, and the fact is that we're going to see the U.S. economy continue to fall over the next 4 to 5 years. So we do anticipate that gold and silver prices will continue to rally for the next 5 years. In actual fact, we haven't even really started to deal with the major reason why you want to be in hard assets, which is inflation. So the fact is that when there's a lack of confidence in a paper currency, investors go to hard assets, gold, silver, diamonds, and those are the markets that we've been recommending to you for the past decade. And the fact is they've done extremely well. Gold has gone from $250 to over $1,500. Silver's gone from $4 up to $50. The platinum and palladium markets have been strong. Oil's gone up substantially. Food prices are skyrocketing all over the world, and that's going to cause a massive problem also because, again, we're at a time when people are not doing well. Either unemployed, their bank accounts are being drained, and now with inflation extremely strong, you've got to see what oil prices and the price of food will do to your budget. And the fact is that people are really in trouble over the extremely high price of food and oil. In actual fact, it's adding, over 10 or 15% more to the overall bills each week, and it's a major, major concern. So again, if you go back in history, back to the late 70s, early 80s, when we had double-digit inflation and record oil prices and problems in the Middle East and all that. That's why gold went from $35 all the way up to $850, and that's why silver went from $1.25 all the way up to $52, and that was primarily because of inflation. There's no doubt, absolutely no doubt in my mind, that we are going to see substantially higher prices in precious metals. And don't let this last pullback concern you, where we saw silver basically go from 50 down to 32.70 in a 4-day period of time. The fact is that's happened 8 or 9 times since we've been in this bull market, and every single time the market has come back and recovered. In actual fact, again, being a student of these markets and traded them for over 35 years, I've seen these situations happen many, many times before. That's why I don't freak out when these type of situations happen. In actual fact, they turn out to be a very strong buying opportunity, and this pullback will be no different. You know, the thing is that 3 weeks ago, when silver fell from $50 down to $32 and everybody was in a panic, the reason that the government gave and what the press said was that there was five margin increases in the COMEX on silver prices. Now, they didn't do that to gold, they only did that to silver. Now, the fact is, it really didn't sit right with me because it's really not the small investor that's in the market anymore. In fact, the small investor isn't close to being in the futures market. It's the hedge funds, and these funds all over the world that are multi-billion-dollar funds are in the market in silver. So the fact is, whether the margin requirement is $10,000 or $15,000 doesn't mean anything to them. The reason that we thought that the silver market fell was because the COMEX forced it down and wanted people to sell out, investors to sell out, because there was a shortage of silver and they couldn't match up the futures contracts to the outstanding COMEX inventory. And sure enough, in the newsletter this week, if you read what's really going on, it starts off saying that they start talking about the 4 big COMEX shorts in the market. It's a very important information that's in the newsletter this week, and then they talk about Scotia McLeod, who's a big metals dealer, losing 60% of its physical silver in 1 month due to reclassification. Then it goes on to talk about the supply situation in the silver market is getting more interesting by the day. So read this report. I don't want to go through every aspect of it, but the fact is that we were right. It was not because they raised margin requirements 5 times in 1 week. That's just the excuse that they give for the market pulling back by 15 or 20% in a week. The real reason is they didn't have enough silver in the COMEX exchange warehouses to match up to the outstanding futures contracts, and that's why silver fell. So if that's what they did, it's only a short-term situation because we saw very heavy support in the market at $32. The market actually came down to $32.70. So basically that $32 level is still a very strong support level, and I highly doubt that we will see silver drop below that level. So basically any pullback that we get in the silver market like we have at this particular point is a strong buying opportunity. The buying for silver at $50 was probably the highest that it's been. So obviously, if silver was a buy at $50, it's got to be a tremendous buy at $35 and $36, which is where the market is right now. So I'm a firm believer that silver fundamentals are as strong as they've ever been, and now that we understand that the real reason that silver fell was because of the COMEX not having enough silver, that means if there's a shortage of silver, and they cannot deliver against the outstanding futures contracts over the next couple of years, is why we anticipate, due to industrial demand, investor demand, we feel that silver will be a $200 metal before this whole thing is over. So obviously being able to buy silver in the $35 range, I think, is a tremendous buy. It's a fabulous buying opportunity, and I would be a major buyer of silver at this particular point. Now, 2 things are going to happen over the summer. One of 2 things is going to happen. Either we're going to be in our typical summer situation where the markets trade in a range like they do 9 out of 10 years. In actual fact, if you go back in history, 9 out of every 10 years, silver will trade in a range. And this year, I believe it's going to trade between a low of an absolute low of $32 if it ever does come back down to that level, and possibly a high of $44. So basically, if the market is going to trade in between that range, you're going to be able to, certain times during the summer, probably be able to buy silver at a lower level than the highs that we're looking for at $44. Now, again, what we do anticipate is going to happen is that if the market does trade in this range during the summer, as soon as the fall starts to hit, just like it did last year, the market starts to take off again. When the traders come back, when the summer vacations are over, and all that starts to hit again, silver will start to run, and we do anticipate that silver will retest the $50 level that we saw last month. And if we break $50 in silver, I know that there's buy orders above $50 in the futures market that will propel the market to $55 to $60 fairly quickly. So again, the point I'm making is that silver at $35 is a tremendous buy. You're never going to pick the exact top or bottom of a market, but again, to be able to buy silver at $35, $36 is a real coup, and I'd be a buyer of it at this point. I still believe that we're going to retest the $50 level, but before this whole thing is over, we do anticipate that silver will be a triple-digit number, and it'll be above 100, probably close to $200 to $250 before this move is over. As the U.S. dollar continues to fall because they are not going to raise interest rates, it tells us that the metals are going to continue to move higher. And again, you want to be a buyer because we could see moves in gold and silver like we saw back in 79 and 80. So again, Randy, I see everything in place at this point. I see very strong inflationary numbers coming out. The price of food is skyrocketing. The price of oil is extremely high. The U.S. dollar is extremely weak. The job numbers that came out this week were very poor. And the fact is that there's people out there that are suffering tremendously, unfortunately. And again, the best advice that I could possibly give you at this particular time is to be in hard assets. If you're sitting with all of your money in paper assets and stocks, you're going to get hurt badly financially, and that's the last thing in the world that we want to see happen. We've been doing this radio show now for 10 years, and we've given very strong advice against what the mainstream has been telling you. The fact is that we have been the alternative investment group, basically, that has basically warned our listeners and clients about the impending situations in the financial markets, and again, went against all the financial advisors and went with a hard asset market. That's turned out to be a tremendous, tremendous thing for our clients. One other thing about this summer, if Greece does default, and Greece is on the verge of default, the fact is that we could see a summertime rally that could bring silver prices up to over $50, and that's if Greece did default over the summer. Now, the fact is the euro right now is telling us that that's not going to happen because the euro went from 150 all the way down to 140 in about a week, and now it's back up to 145, 146. So it tells me that right now things are a little bit more comfortable in Europe than they are in the United States. And again, what I think is going to happen is that we'll more than likely see this market trade in a range for the summer, then see it take off again in the fall, and see us attack that $50 level again.
We could be in a similar scenario to last year. We knew quantitative easing was coming. We were pounding the table very hard in the summer. Buy precious metals. We knew quantitative easing too was coming. And then we saw what happened in the fall, a major, major move. And we could be in a similar scenario where people that are adding to positions, starting positions during the sort of off-season, if you want to call it, there is seasonality to precious metals, and take advantage of seasonality during the quieter periods when it's trading within a range. This is an opportunity to add positions, add to positions, start positions, and then by the time the fall rolls around and the U.S. economy could be in serious trouble, we could see more quantitative easing and this market could simply take off again. There's only one company that Harold recommends that you deal with when it comes to investing with precious metals. That is Worldwide Precious Metals. Their website is wwpmc.com, wwpmc.com. The telephone number to connect with them, 1-866-623-2002. A trusted Canadian company in business for over 10 years, the entire time this bull market is on. As I was driving into work today, I heard an ad for a rival company. And where were these people 10 years ago? Where were they on the radio making a recommendation, as Harold has 10 years ago, buy gold, buy silver? they were nowhere to be found. Go with the people that Harold trusts, that is Worldwide Precious Metals, the people who have been around throughout the entire time this bull market has gone on. They have the knowledge. They only deal in physical precious metals, whether delivered or stored, no paper promises. And we've seen what paper promises can do with that recent pullback. Stay away from ETFs, stay away from certificate programs.